Euler has launched on base chain. What does that mean? It means that now you can earn, borrow, yield, loop, leverage on Euler on base chain, potentially farming maybe a base chain airdrop in the future, but certainly farming Euler's incentives and also just participating on an incredibly fast and cheap chain. So let me tell you a little bit about Euler for those of you who don't know, and then I'll show you sort of my favorite strategy here. So Euler, borrowing and lending protocol, it can do almost anything that a borrowing and lending protocol can do. It can have siloed markets. It can also have shared margin markets. So here you can check out these two markets that are currently listed on base chain. By the way, if you want to see a ton of markets, go over to the Ethereum chain. They have a lot of markets with a lot of money in them. But on base chain, relatively new, relatively fresh. That's why there are incentives flowing over here. But if you go to the Euler base market, for example, you can see all of the different types of things you can lend for an APY. Now, the other cool thing here is that a lot of these are participating in Turtle Club, which means they might get boosted points or maybe some airdrop in the future as an additional benefit to the supply APY and these sort of magical points. Now, if we go to borrow, you can see, let's go to, again, the Euler base market. You can see all of the different sort of pairs you can borrow with. So you could borrow euro against the dollar, both Coinbase's issued assets here. You could borrow Easy ETH against wrapped EtherFi ETH. They have many, many, many options. And one of the cool things that this shows you is your max ROE. Now, your ROE is effectively your annualized yield. It's, very similar to APY here. And what this is showing you is if you were to max leverage this pair, which means to lend USDC, borrow EURC or EURC, convert that to USDC, add that as collateral, and then just keep repeating that process, what we call looping, or some protocols call folding, your max leverage on USDC versus the euro would be 8.31x. And that leverage, you would be getting an APY or an ROE of 135%. Here's the caveat, though, that 135% is largely paid in Royal, so you should know what Royal is or what it means. Royal is Rewards Oil Token. Now, the oil token is a proprietary token of Euler for governance. It's actually gone up quite a bit recently. Rewards Euler, however, the Rewards Oil token is a vesting token. So in order to get the full value of it, you need to vest it for 6 months, or what you can do is you can immediately realize 25% of its value, and the other 75% of its value that would have been vested to you gets burnt, which is kind of cool. It makes it kind of deflationary if you are harvesting these emissions continuously. Maybe you want your oil immediately because the price action has been going up and you kind of want to hold it as soon as possible, or maybe you don't mind just sort of vesting it because you think it's going to be a consistent move upwards. Whatever your thesis, there are options. So it's not like you have to vest, but if you don't vest, you do lose 75% of those emissions. Now, you would, of course, still get the base APY. So here, the collateral APY is let's just call it 6.5%. And then the rewards APY is, let's call it 15%. So if you immediately realized the Royal, instead of 15%, it would be 25% of that. Let's just call that 3.75, right? So 3.75 is what you could immediately realize in the rewards, and then 6.5 is what you immediately get from lending. Lending is just organic yield that borrowers are paying you. All right, now the cool thing about this is that unlike most other money markets, Euler actually allows you to do the folding or looping automatically with the strategies tab. So now I can sort of show you what my favorite strategy is, which is shorting the euro. Again, you don't have to short the euro, but if you are a Forex person and that kind of trade appeals to you, then you can do it. So you can short the euro and get paid. Now, let's click view details here. And what you see is the max ROE is 135%. We saw this in the last page. The supply APY. So the way they get that ROE is by multiplying the supply APY times the multiplier, so 20 times 8.31, and then you subtract the borrow cost times leverage minus 1, so 8.31 minus 1, so 7.31, so it's 20.82 times 8.31 minus 5.14 times 7.31. Now that will give you 135.48%. Why do they do that? Well, because the leverage collateral yield is what you're earning, and then the leverage borrow cost is what you're paying. And you're always paying leverage minus 1 times borrow cost because you are not borrowing your initial capital, your principal, whatever you deposit as your starting point. You're not paying any interest on that because you're not borrowing that. So if you wanted to see what the max ROE would be without considering max vesting, you could do that. All you have to do is say, okay, well, if I immediately realize this, my rewards APY would be like, an initial 3.5%, 3.75. Let's just call the lending plus the rewards immediate realization, around 10% altogether. So 10% on the supply, 5.14 on the borrow. Let's just call that 5 for fun. So 10 times 8.3, very easy, 83%. And then we have minus 7.3 times 5. So, we'll call 7 times 5 is like 35. Let's boost it up just a little bit for other numbers. Call it 40, right? So roughly 40% net, 80% on the collateral, 40% to borrow. We'll call it a net positive 40% right now in realizable yield in real time. If you want to vest, of course, you can get the 135%, but to short the euro and get paid between 40% immediately in APR or 135% with vesting seems pretty good. Now, there is only $282,000 of liquidity here. This is a new market, right? It's just come to base chain. So don't think you can go here with $100,000 max leverage and expect to keep the same borrow cost, right? With low liquidity environments, when you borrow a lot, you shoot up the borrow cost. So that can happen. You probably want to ease into this. The benefit, though, it's on base chain. So transactions don't cost very much. You don't need to use a lot of size to compensate for the slippage and the price impact and the fees and the gas costs that you're going to incur. Rather, you can go over there with a smaller allocation and sort of ease into it. Now, the fun thing, if you don't have a thesis on Europe and you don't want to short the euro, you can also long it. And in that same vein, if you wanted to delta neutral it, you could simultaneously open up a whatever X leverage long USDC euro and short. So you could take the counter side of this trade. So shorting the euro against USDC, currently paying 135%. Longing the euro or shorting the dollar way down here, currently paying 60%. So you can get paid 130% and 60% at the same time to be neutral on your Forex trade. And of course, neutral here would be dollar neutral, not euro neutral. So effectively principal neutral is what we're talking about, denominated in dollars. So it's kind of like longing the dollar, I suppose, but you're not leverage longing the dollar. And you're not shorting anything. You're not necessarily short the euro. So that's kind of fun, and you could do that trade. There's a lot of other trades as well, like, you could do the flippening trade and get paid 60% for, which is that you think ETH will overcome BTC. It's been a rough trade recently. Bitcoin dominance has been up. Bitcoin versus ETH has been up. However, hopefully we'll see a flip, as we often do in bull markets. There are a lot of other trades here that you can do. Check them out, but be mindful of liquidity constraints, right? Right now, lowish liquidity environment, which means, maybe lending is the best play here, or if you're going to be looping and leveraging, doing it with a small amount just to start and get the hang of it. And if you want to play with the big boys, certainly go over to Ethereum, where you can find some of my favorite strategies. As I mentioned multiple times, I really, really do like the resolve markets. And now, even Tulipa has their own resolve market. So millions of dollars of liquidity there for great APRs. But hey, help yourself to some base yields, help yourself to some Ethereum yields. Plenty of stuff to do. And thank you guys so much for watching. Have a wonderful rest of your day.